Hey everyone, welcome back to the channel where we break down stocks with the kind of detail that actually helps you make smarter investment decisions. Today we're diving deep into HIVE Digital Technologies, a company that's been making waves as it shifts from Bitcoin mining routes into the booming world of AI infrastructure. Let's kick things off with a quick look at where HIVE stands right now. The stock has shown massive volatility, but also impressive recent gains, climbing over 90% in the past year, even as the broader crypto and tech sectors face turbulence. With a market cap hovering near $1 billion and shares trading around the mid-$3 range, this is a high-risk, high-reward name that's betting big on its pivot to high-performance computing. HIVE Digital Technologies operates data centers powered entirely by renewable energy, with facilities in places like Canada, Sweden, and now expanding ambitions in Paraguay and the Greater Toronto area. Originally known as a blockchain mining play, the company rebranded in 2023 and is aggressively repositioning itself around AI workloads through its Buzz HPC division. CEO Aydin Kilic is steering a strategy that leverages existing power infrastructure to host massive GPU clusters, targeting sovereign AI demand that could dwarf traditional crypto mining economics. On the revenue front, fiscal 2026 delivered a standout performance with total revenue hitting $297.8 million, representing a blistering 158% year-over-year jump. This growth came primarily from Bitcoin mining operations that benefited from higher crypto prices and expanded capacity, though management is clear that future upside hinges on scaling the HPC and AI side of the business. The company hasn't broken out detailed product or geographic segments in recent filings, but the overall trajectory points to mining cash flows funding the AI build-out. Earnings tell a more mixed story. For fiscal 2026, the company posted a net loss of $148 million, or 66 cents per share, pressured by higher operating expenses and depreciation as it ramps new facilities. Gross margins turned negative at around negative 21%, reflecting the heavy investment phase. Still, EBITDA came in positive at $27 million, showing underlying operational cash generation from the mining business remains intact, even as losses widen on paper. Turning to management commentary from the most recent earnings discussion, leadership highlighted strong momentum in Paraguay operations and expressed optimism about the regulatory backdrop post-election there. They emphasized the capital reallocation toward AI, noting the acquisition of 25 acres and 320 megawatts of power capacity near Toronto as a cornerstone for what could become one of Canada's largest AI gigafactories. The tone was forward-looking, framing Bitcoin mining as reliable cash flow that subsidizes the higher-margin AI infrastructure build. Looking at the balance sheet, total assets reached $639 million by fiscal year-end 2026, supported by $159 million in new financing that boosted cash reserves modestly to $23 million. Debt remains manageable with a debt-to-equity ratio of just 0.13, giving the company room to fund expansion without immediate dilution pressure. Free cash flow turned positive at $62 million for the year, a sharp reversal from prior periods of heavy capex, though ongoing investments in property and equipment will likely keep that figure lumpy going forward. From a valuation standpoint, HIVE trades at roughly 3.3 times sales, which looks reasonable given the growth rate, but expensive relative to traditional miners because of the AI narrative premium. The price-to-earnings ratio sits in negative territory due to losses, so investors are really paying for future HPC potential rather than current profitability. Compared to peers in the IT services space, the multiple isn't outrageous, but any slowdown in crypto prices or delays in AI deployments could compress it quickly. Let's run through the SWOT lens. Strengths include a renewable-powered footprint that appeals to ESG-focused AI clients and existing power assets that can be repurposed faster than greenfield competitors. Weaknesses center on ongoing losses and a still nascent AI revenue stream that hasn't yet offset mining volatility. Opportunities are massive in the sovereign AI build-out, especially with the Toronto Gigafactory plans targeting over 100,000 GPUs. Threats include regulatory shifts in crypto jurisdictions, execution risk on the HPC pivot, and intense competition from bigger players with deeper pockets. Recent performance has been dramatic. The stock surged 32% in the past month alone and posted nearly 80% gains over 3 months, fueled by the AI announcements. Year to date, it's up over 90%, though the 5-year chart still shows a steep decline of more than 70% from peak levels, reminding us this remains a speculative recovery story rather than a steady compounder. When we think about intrinsic value here, traditional DCF models are tricky because of the rapid pivot and lumpy capex, but we can ballpark scenarios around the mining cash flows plus the optionality of the AI buildout. Under conservative assumptions, the model puts fair value somewhere in the low $3 range, while more optimistic AI ramp scenarios could push it north of $5. Remember though, small changes in growth rates or discount rates move these estimates around a lot, so treat any single number as directional rather than precise. Wrapping up, HIVE represents a classic high-conviction turnaround play that has successfully used crypto mining profits to fund an AI infrastructure bet with real scale potential. The recent revenue explosion and power acquisitions are encouraging, but execution on the HPC side and crypto price stability will determine whether this becomes a multi-bagger or just another volatile miner. If you're comfortable with the risk, the setup looks intriguing at current levels, but size positions accordingly and keep an eye on quarterly execution. Thanks for watching. Hit subscribe for more deep dives, and I'll see you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.